Hi, welcome to this video day, which is on the 8th of August. It's Sunday. This is our weekly Forex forecast. Going to pick out the pairs that we really like from a risk-reward point of view for the week ahead. And we've got quite a few pairs to look at. We'll go over the charts in just a moment. Now, in our forecasts over the last few months, our big view has basically been the same. The dollar is going higher, and so is the yen. Both the dollar and the yen have moved higher over the time period. But I think both currencies have got further upside. Now, last week was a little bit kind of boring until Friday. We had kind of low volatility. Friday, the volatility picked up. Dollar was up, and I think next week we could see continuation to the upside, and also the yen as well. Now, what we're going to do, let's go and take a look at the trades. Obviously, before we do so, just keep in mind that this is my view as of right now. It could, of course, change in line with market action and conditions. If you want all our trading techniques, our daily technical sentiment analysis of 14 FX pairs, all you need to do is click on the link beneath this video and you can get live access to our member centre. You can also follow our Facebook page, join our Facebook group of traders, and check out our recommended regulated ECN broker. And finally, if you're not a subscriber to our channel, you can subscribe by just clicking the icon in the bottom right of the screen. Now, just done my updates for the weekend in the member centre. We're going to use the charts from there. Before we look at individual pairs, just want to look at the sentiment towards the USD first. Right, this chart is just general dollar positioning of really big managed money like hedge funds, etc. It comes from the COT net traders positions. Now, in terms of, if you're new to our videos, we will do a lot of sentiment analysis, because if you do sentiment analysis towards the big fundamentals, where the big money is sitting, you can get advance warning of trend changes in the market, and also have the confidence to follow really big trends. Also helps us keep our technicals very simple, which you'll see in a moment. Now, in terms of our logic of being long of the USD, these three groups were really short back in January. This was a record net short position here by the asset managers. They bought the dollar a bit, then sold down again. But then you're seeing short covering from the asset managers. The other two groups have actually now gone to a little bit of a long position in the dollar. Asset managers I expect to go long as well. The strength in the dollar we've seen over the last few months is really just stops being taken out and shorts being taken out in the market. I now expect the speculators, all the big groups, to go long and push the dollar higher. Now, in terms of this next chart, it comes from Sentiment Trader, and you can see the note here. DXY dollar index just saw an end to its third longest streak of net short positioning in as many decades. This has historically been a positive signal for the USD, which it has. This chart is in our weekly market update. If you're going to go and take a look at it. Now, what we are going to do is go and take a look at our first pair, which is Euro USD. Right, Euro USD have been short of this one since June, when we topped out above the 122 level. Nice heavy fall there, then a more kind of gentle fall up to resistance, a nice red on Friday. Okay, now in terms of the euro, I've been saying it for months, it's got limited upside and big downside. Okay, now in terms of why, just general terms in relation to the USD, we think the dollar is going higher because the Federal Reserve will withdraw stimulus much quicker than the market expects. We expect it to be in the next few months. The market doesn't think it'll be till next year, but we think with inflation soaring in the US, also solid jobs number NFP on Friday, which is why the dollar has strengthened. The Fed can basically cut back stimulus. They've been waiting for the job market to heal. Decent number on Friday. The numbers going forward will be good as well. And inflation is high, so I do not think they're going to wait until next year. On the other side, euro fundamentals are terrible. They're not going to be able to reduce stimulus because the poorer nations in the zone are in such bad shape. Said it before, the idea of a eurozone broad-based recovery is a bit of a myth, really. The poor nations will not recover quickly. So in terms of the euro, just sell back to 119 if we were to get there, or basically if it goes above 118, sell back through 118 or come off 119. I think that's a big level of resistance. What about if we don't rally? Watch 117, because if 117 gives way, then 116, then 114 are my initial targets on the monthly charts, and I think we could go as low as 110. Okay, last few months not too volatile, but I think the volatility could well pick up. I also really like the look of the euro correlated currency short, which we'll come to in a moment. Now, despite this big fall, just show you here. I know we looked at general dollar positioning. This is basically speculators positioning in the euro only. Look at the asset managers, how long they are. Okay, that's the overall positioning. You've only just got the hedge funds going short of the euro. All these three lines here should go heavily south. Also, people are too, or speculators in our view, are too bullish of the euro on the yen. I really like the look of euro JPY short, which I'll come to in a moment. And yeah, you can see this is euro USD over the last 3 months on the COT net trade position. Speculators, they're coming out of longs, but we want to see them go short. And I think they're going to do that, hopefully, pretty soon. So in terms of the euro, yeah, limited upside, a lot of downside. Where are we going next? We will go to AUD USD. Right, just before we go and look at AUD USD, I'm just going to take a quick look at GBP USD, because I really like this as a short against the USD, because the pound had a really big bounce. You can see we come down here below 136, come back above the level, and yeah, in a short space of time, we do a near enough 400 pip rally. Obviously, economic data decent out of the UK. We had Freedom Day in the UK, the end of lockdown. But we were saying at the time, this 140 level, big institutional level, it'd be hard to take out. So we sold on this red here. Came down, tried to get back up. We had nice solid red on Friday. Any rallies back to this double trend line resistance are selling opportunities. I think we should get to at least 137 and probably run on to 136. I really like the look of this one short. Now let's go to AUD USD. Like the euro, I've been following this one down for a good while. And in terms of the price action, yeah, we kind of went sideways here. There's a nice downtrend now. We've got a little bit of consolidation, sideways action. Okay. My own view on the Aussies, it's got further to fall. This consolidation will end. Our top is our stop now is quite tight behind the double trend line to lock a profit. Okay. But yeah, if we did get stopped out, we would look to resell. If we bounce through our stop, we'd probably come off the 75 level for shorts with a stop back behind the big 76 level. What about if we don't rally? If we go through 73, I'd expect the consolidation to end and we go down to monthly support at 70, then possibly even as far as 65. It's a big downtrend. And the reason I'm really bearish of the Aussie, obviously I'm bullish of the USD, but if we were to look at the Bloomberg Commodity Index, okay, look at commodities. They've been on a massive rally to the upside. That has not been supporting the Aussie dollar. We're now rolling over. This is the dollar index inverted. So when the dollar's going down, it's obviously getting stronger. Stronger dollar is bearish for commodities. So I expect this gap to be closed. Now, if you're looking at the Aussie dollar, the most important commodity to keep your eye on is iron ore. And massive move up, just speculatively driven. When we were here, we couldn't find any analysts who thought that iron ore might fall. But it's a speculative bubble, and you can see a really nice move to the downside, and we should run on, I think, to 160 at least, and probably back here and retrace the whole of the rally so far. Since the end of 2020. Okay, so iron ore, very important. Yeah, 50% of Aussie exports. So yeah, commodities going down should take the Aussie down as well. So sell a breakout or look to sell a rally. Next pair I like is USD CAD. I'd like to look at this one for a while. We got most of that big move up. Then we got stopped out. We've come back in long again now. And I just see this as kind of a correction in what is a bigger bull run. Okay, so it's a decent correction. Then we steady, move up. We're trying to get through this 20-day moving average green line here. I'd like to see us close above it. Then we should go to 128 and then 130. If we go through 126, our stop will come tight behind 125. It's presently behind this level here. Okay. Obviously, CAD will be impacted by commodities as well. We're bearish of crude oil, expected to fall. So yeah, they're our favourites in the majors. We'll just look at a few minor USD pairs, and then we'll look at some yen crosses. All right, just on the US dollar against the Swiss franc. We were looking at this one last week. We'd come down. The candles are kind of, they're red, but yeah, the downside pressure was easing. Go for an aggressive entry on the blue. Non-farm payroll, big blue to the upside. We should go all the way back to chart highs. If we open blue, okay, you get a strong candle. Stop can be behind the 91 level. Okay, if we dip back, I'll just buy strength of this first level support. So I think the Swiss franc is overbought on a lot of other currencies. Even the euro, I think, is going up on the Swissy. I think the Swiss is going down on the JPY. So we'll see what happens. But if we open strongly, we should follow through. Any pullbacks this level here, buying opportunities. A couple of euro proxies. I'll look at the same two as I did last week, although I'm bullish of all of them. This is or the USD on all of them. This is USD NOK. Big rally up in the USD. Natural retracement. Come back above the 880 level. Nice blue on Friday. I'd like to see this level give way. This gives way up to 910, but my monthly target 950. So right up the top of the computer screen. So by the breakout, tuck the stop behind there, then you can trail it up. Gives a really good risk to reward in our view. Not only is the Norwegian krona correlated with the euro, Norway is also Europe's biggest oil exporter, and we expect oil to get hit. Big move down, so that should give additional support to the USD. But even if oil doesn't fall hard, USD in our view is going up. Next pair, I'd like to look at the USD CZK and USD SEK, but this one is one we've been really focused on over the last few months. Nice rally up, which we caught, then we got stopped out. Look at the candles here. Volatility drops, and then we get a nice entry on the breakout. Finish nice and blue. Again, if we open blue, stop behind here, look for this level. But again, we're expecting a move up. In this instance, the weekly resistance, also monthly resistance actually, which is 420, which again, right up the top of my computer screen. Okay, two pairs to finish off with in terms of the USD. USD MXM. Said for a few weeks, this one's kind of frustrated me. Because keep trying to buy it and it comes back down, it's choppy and sideways. Got stopped out of it a couple of times actually. Back in now with a blue. Now, candle on Friday that's above the 20 level. If we can open blue, I'm expecting a big move up. Now, the peso has a reputation for chopping around, but then it has explosive bounce to the upside of volatility, like here or over here on the left of the screen. I'm hoping the same is going to happen again. If the dollar really gets a broad-based rally going, emerging markets currency should get hit hard. Okay, Mexico is an emerging market, relies heavily on dollar funding, so if stimulus gets withdrawn, that's heavily bearish. Okay, also Mexico's a big commodity exporter as well, and we're bearish of commodities. So we'll see. If we open nice and blue and get through this high, off to the upside, you can just tuck your stop back behind the 20 level. Okay, an emerging market that's been kinder to us in recent months is the ZAR, USD ZAR, a big move up. Okay, then we get decent retracement, and we've come back in, and we're now above the 1460 level, again off the high. If we go through this high here on Thursday, okay, where we exhausted back, that should trigger a move to chart highs. Then on to monthly resistance at 16. And if we get through this high here, you can use quite a tight stop. Okay, so back behind this low initially. If she runs, you can then bring it up behind the 1460 level. So in terms of USD pairs, our favourites haven't really changed over the last few months. But they've done well longer term. Okay, and just feel the dollar. Hopefully we'll have a good week next week. Now let's just take a look at just a few pairs to finish off with, and I'm going to start with a couple of yen crosses I really like. Right, we're on CAD JPY. Now we're bullish of USD CAD, bearish of CAD JPY. We still think the CAD is really overbought. A lot of speculators are long of the CAD. We actually like GBP CAD. I'm not going to look at it today. My view is the same as last week, okay? But in terms of this one, come down quite nicely. But then we rally back up, and now we're really struggling at this big round number here, 88. Stalled on Friday, little blue candle. If I was coming in fresh to this one, I'd come straight through here. Okay, more conservative entries through this double bottom here, but I'd be aggressive. Come in. I think we're going down to 84, then 82. You can see it's a really good risk to reward trade. So I really like the look of it. I like the look of AUD JPY as well. I looked at that last week. My view hasn't changed, but I think this one has got the potential to do more. Okay, we shall see. I'm going to look at a pair I didn't look at last week. CHF JPY. Here's resistance at the 121 level. We briefly get above it, try and get back and clear the level. Nice red on Friday. If that red continues, a week I'd just sell 118 then 116. Any rallies back to here are selling opportunities. Okay. So it's not the fastest moving pair. It's a bit like USD CHF, but it's really like the risk to reward on it. Where should we go next? We'll go and take a look at Euro JPY, and I'm going to look at one GBP cross to finish. Right, Euro JPY, I've been following this one down for a while. It had a nice fall. Recently, it's hardly done much at all. The volatility's dropped, and we're hugging the 130 level. We're trying to get away from the 130 level, can't do it. Red on Friday, I would just be a seller. For a move down to 128, then we should go on to the weekly, monthly support at 126. You don't need a wide stop. Ours is just back behind here. Okay, so another good risk reward yen trade. And obviously, we're very bearish of the euro generally. And in terms of the euro, I just want to look at a pound pair, which is Euro GBP. And I've been saying in my notes in the member centre, this has been a boring pair for many months, okay? But after that rally there, we came down, and now we've broken out to the downside. So basically, we've broken this level of support. I'm now looking for a big move down. I'll just show you the weekly chart. I want to show you the monthly chart. We're going to go to Euro GBP. This is the monthly chart. And I'm looking, if you look at kind of fair value, keep in mind the GBP is still extremely oversold due to all that, Brexit drama that we had. Big fundamentals point to a move down to 80 and possibly even down to 75. Okay, so this could be a really good trend trade or trend following trade. In terms of the way we've broken out, if we come red again, our stop will come down here. Okay, at the moment we've got it back here, but it will just tuck in behind the 85 level. So this could be a big trend just about to start after what was very messy price action for many months. Okay, I'm bullish of GBP on the CAD I looked at last week and a few other pairs, but done enough for today. Plenty to look at. We'll see how the week pans out next week. But so far over the last few months, really good trading conditions. Let's hope August ends up being a good trading month as well. We shall see. Right, that is the video. Thanks for watching it. Take care. Have a good day.